We have the deactivation stroke deregistration. When this client gets a TIN, or when you get a TIN, you might have got a TIN some time back, and you got a TIN to do some business, and the business didn't take on. Kindly, when it doesn't take on, it is okay. Come and tell us. Things didn't work. You request us to deactivate the TIN in the event that you don't have any other income. We deactivate it, we put it on hold until you get back on your feet with your business. Then you come and apply for a reactivation. That stamp is active. And we have only one vendor for the stamps. The vendor is called SIGPA. It's a company located in Tinda. So if a manufacturer, an importer, dealing in any of the excisable items that we gazetted, they should order for these stamps. And by the way, we gazetted 13 items. We gazetted water, beer, wines, spirits, cigarettes. Then we continued and added cement and sugar. Then finally in 2022, we added 5 more items. We added other non-alcoholic items where we were bringing in the kombuchas, other alcoholic. Then other non-alcoholic, like the energy drinks, Red Bull, these, how are they called? Sting. Then we added fermented beverages like pushera, cooking oil, and fruit and vegetable juices. So apparently we have 13 items that are meant to be stamped. Whenever you're looking for a stamp on an item, it has to be on the lid of the item. It shouldn't be anywhere. And it is very clear, they are aware that they should not deface the stamp. Because we need to authenticate it at all times. We have gizmo machines that our scouts use to go in the field and test whether the stamps on the item are authentic. Because we had discovered there are people who used to make the stamps on NASA and sell them to the manufacturers. So we normally at times do that to see that everything is well. However, in the event that one produces any of those items and they are for exports, we don't expect them to stamp. For example, if Renzori produces water and the water is going to be exported to another country, you're not mandated to stamp exports. Reason, the country where you're going to sell the water, they may have their different regulations. They may have different stamps. So we don't want you to stamp twice. So that is why that is like that. We equally collect stamp duty. Stamp duty is collected from instruments that we indicated in the Stamp Duty Act. That is CAP 339. We have about 67 instruments. It is meant to authenticate that document to be permissible in the eyes of court. Documents like what? We used to collect stamp duty from agreements, but last year it was repealed, so we no longer collect the 15,000 from agreements. But we collect from an affidavit, we collect from articles of association of a company and memorandum of and the memorandum and articles of a company. We collect stamp duty from bill of lading. We collect stamp duty from divorce. When you divorce your friend, don't just tell the friend to go. Because remember how you birthed that relationship. You should give it a closure. So that at one time you're not somewhere in a church or mosque and the other party comes up. to claim you. So kindly close those things in the right way. When things don't go on well, just file a divorce. When you get it, go to our web portal, stamp duty, declare an instrument, say divorce. It will auto-populate the 10,000. If there are more than one copies, you will tell them the copies. The system will multiply. Pay that money, less than 100,000. Come to us. We barcode the instrument. That's a divorce. We give you a stamp certificate. You go and sleep. You wait for somebody who will disturb you at time T when you're entering another arrangement. That is how life should happen. Because somebody will disorganize you because you didn't pay 60,000. Yet you put in millions and millions in the occasion. So it doesn't make sense. Kindly let's do things the right way. When you cancel an instrument, we collect stamp duty. When you caveat, we collect stamp duty. When you want a lease, we have stamp duty. Whatever is in Parliament, I know there is an amendment around transfer of land, but as I had initially given here a disclaimer, we don't discuss what hasn't been assented to by the President. Then we have, he told us to talk about taxation processes and procedures. On our side, it's very simple. The processes we have is one, registration. That is when you apply for a TIN. Because I need to grow my register, so I need to bring in as many as possible, provided I'm sure they have income. So it comes through registration when I assign you a TIN, and my TIN is free. The only thing you do is maybe to put in transport to reach here, or to put in transport, or maybe to go to internet and get some small data and apply for yourself. But our TIN is free. So, and the next in that process is filing. Filing of weekly returns, monthly, half annual, and annual. There are returns we receive on a weekly basis. If you didn't know, we have a tax called game pooling and betting tax. Abebi banda. Arsenal Man U, Wazanyo Gwembalasi. Those funny things we spend on in our leisure time. So once you go there, government doesn't have any problem with you. But when you win, government takes 15%. It is a way of discouraging you, and it is final. It is not creditable. To the 15 they took, let it help you reduce the other liability. Government is telling you, don't go very much in the vivanda. Let us get involved in more productive activities. But if you wish so, we find you there. We pick the 15% withholding, and we equally pick 20% from the owner of the chibanda. Zayingiza, we get some 20% as game pooling and betting tax. So those are the people who give me a weekly return. Monthly return, I get it from those who are registered for VAT, pay as you earn, withholding tax, and local excise duty. I expect their return by the 15th day of the following month. That is what is stipulated in the law. But failure for that return to come in time, normally it will cause a penalty for late filing or even non-filing of 200,000. Those we receive half year are the provisional returns. Because as you're trading, we want you to paint a picture for us. Bitambula bityeyo, how is it moving? So that you don't give me the liberty to estimate for you. So provisionally, I expect it half the year if you're a non-individual. If you're an individual, by 30th of September, give me that provisional. However good or bad, I don't mind. But paint that picture and tell me, meeting so and so, things are like this. It is okay. I will wait for you at the end of the year. When my year ends, I expect a final return. That wraps up the whole year. Normally where assessments come from, and you hear the public get annoyed with us, because when they sit in their businesses, they forget us. Somebody works for a whole year, another year, no return, no communication. Yet our work, I told you, we are here to mobilize revenue in a transparent and efficient manner for government to do its work. So when you forget us, the law gives us powers to come and think for you a modest figure using the industry averages in which you operate. If you're in a saloon, I look at how many saloon people in the area you're operating have filed a return. So I use their average, their income, the average of their income as a baseline to start estimating for you, which isn't good, but because you have failed to deliver, and I need to level the playing field. If others have given their return, what about you? Yet you are in business. So normally that is where we get issues with our clients. They may not know what to do, or some know, anyway, but because I am paid to do that, that is why you find that estimate coming on your tin, and you become a little uncomfortable. But I may have nothing to do. It only pushes you to file an objection, and you tell us what is at your end, what you agree with, what you don't agree with. Then we look at it. That is where we have the objection. I've talked about it. When the objection fails, because you're meant to object within 45 days when I give you my assessment. And as you object, I have 90 days to respond to you, to give you an objection decision. But once it's uncomfortable for you, still we created what we call alternative dispute resolution to get independent persons who haven't been on the objection side to see whether they can get you clear. Where is the discomfort from? So that we are fair. But if all that fails, then you only need to go to TAT, which is the Tax Appeals Tribunal. But TAT has a conditionality. Before they can hear you, 30% down payment is their requirement. That is why we created the ADR, because we knew many clients may not be able to afford paying 30%, yet they are running away from payment. And you're asking them to pay 30%. So that is why the ADR came in between there, to see that we can save. We have the deactivation stroke deregistration. When this client gets a TIN, or when you get a TIN, you might have got a TIN some time back, and you got a TIN to do some business, and the business didn't take on. Kindly, when it doesn't take on, it is okay. Come and tell us. Things didn't work. You request us to deactivate the TIN in the event that you don't have any other income. We deactivate it, we put it on hold until you get back on your feet with your business. Then you come and apply for a reactivation. That is how we do it. Then we have enforcement. Enforcement normally comes in if we feel we've communicated to you and you have refused, or you haven't given us time to plan with you. How are we going to make this good? Normally we bring in the tougher side because government needs the money. Government to Jibanja services. Where will it get the money to offer the services when we ourselves don't want to take our fair share of taxes? So that is where we come in to see that we can help government. So you also told us to tell you about the incentives we have, or exemptions. There are quite many, but I picked out a few that I feel could concern the majority of us as we try to communicate to the different spaces. In 2025-26, there is an amendment that came in, and it is very clear. It says, income derived from a business that you've established as a citizen from 1st July 2025, it will get an exemption on income tax for 3 years. However, this business should be owned by a citizen. It should have an investment capital that does not exceed 500 million. This citizen should be in position to file an income tax return. Are we clear? If you establish this business, establishment implies URSB's registration certificate has a date beyond 1st of July 2025. And the business you registered is owned by a citizen. In the event that we are under the East African Community Arrangement, in the tax perspective, a citizen is one who originates from any of those countries. Uganda, Kenya, Tanzania, Rwanda, Burundi, South Sudan, Congo, those that signed in under the East African Arrangement. Those are citizens to us. So that is the exemption you have if you register your business. Yes, you will be filing and telling us what happens there, but you will not be paying income tax in the event that you make a business. The other exemption that is very obvious, the income of a person derived from exportation of finished goods. If you manufacture goods here up to finished level, and you're manufacturing consumer goods and capital goods, you'll get an exemption for 10 years, provided you can export 80% of the production of the goods. In most cases, here you must have applied. In case of a new investment, you should apply in writing to the Commissioner General to be issued with a certificate of exemption at the beginning of the investment of that person. Or, in the event that it was an existing investment, still you apply for a certificate from the Commissioner General, which is effective from 1st July 2007 in that regard. So most of our people here manufacture, but they may not know that if you're selling 80% of what you have produced outside, you have an exemption of 10 years. And secondly, that export is zero rated for VAT purposes. When I say an export is zero rated, it means that we are not picking VAT from that export. That means you'll be selling it cheaper in that country, and you will have the window to claim for refund of the VAT that you accrued to produce that item. That is what zero rated implies when we are managing your tax affairs. I felt we should talk about IFRIS. Since I am with reporters today, IFRIS is electronic because you're going to use an electronic gadget. Fiscal, not physical, fiscal, because there is a tax component in that transaction. Receipting, for those clients who may not be VAT registered, but are using the system, they are going to produce e-receipts. Invoicing, for those clients that are VAT registered, they are going to produce e-invoices. It is a solution that came to address the challenges that we had seen. That is why we introduced IFRIS on the 1st of July 2020, And we did training for the 6 months up to 31st December. So our system went live on the 1st of January 2021. We have some initiatives as URA that are available. I've talked about IFRIS. We have voluntary disclosure. In case you want to disclose something on your declarations that was done wrongly, you can do so, and you come and disclose on a particular return. We are not going to give you any penalty, but we are going to just take what you've disclosed. It's what you'll pay. Then we have the client relationship management. This is for clients in MTO and LTO. We have the out-of-court settlement that we can explore. We have the digital tax stamps, as I had indicated. And our compliance cycle moves like this. We expect you to register. We keep proper business records, timely filing to make sure that you don't get penalty, timely payments to avoid interest, adherence to IFRIS for VAT registered clients, and adherence to the digital tracking solution for those dealing in excisable items. Then we have the enforcement processes. You asked me about enforcement processes. We have the agencing. When we agence your bankers, we at times close the client's premises. We could seize clients' goods. Then we manage one's business or property under receivership. Then we could recover the tax at times under third parties. Then we have the waiver. Our waiver is very clear what we are preaching these days. We make sure that we preach it so that if you have outstanding liability that accrued from when you started business up to 30th June 2024, we assure that you establish the principal tax within that period and you deal with it. Once you pay it fully, we are going to remove the penalty and interest thereof. Thank you so much.